Hi everyone, welcome back to Paisa Bolta. Anand's away in Saudi, attending a couple of events over there. So for those of you who are catching him, I hope you're having a wonderful time there. Me and Kesa were back in studio, trying to fill in much as we can for Anand in Paisa Bolta. I know this is primarily a Hindi channel. Me and Kesa are not native Hindi speakers, so we will be sticking to English and trying our best to deliver you content which is relevant, though it's not in Hindi.
Yeah.
That being said, Kesav, I thought today we will talk about how inflation is affecting Indian households' savings.
Yeah, sir. You told me that the savings percentage has gone declining from previous year. The previous year, the percentage was 1.1. Now it's came to 5.1.
Correct.
And the liabilities percentage are also increasing. Previous year it is 35 point something. Now it's gone to 37 point something. People are more ready to get a loan and spend things, but not saving. How do you see it, sir? At the end of the article, they said that it will become biggest economic problem if this happens so far. How do you see it, sir?
Correct. So as we know, inflation is the cost of buying anything.
No.
Right? That cost of buying anything, including services, is going up. Petrol prices are going up, vegetable prices are going up. Across the board, all services are going up.
Yes.
So that affects savings. Every year, everyone tries to save money, right? In terms of fixed deposits, in terms of investments, buying gold, whatever. We try and save money. That percentage is coming down. That reflects that the amount of money required to live is going up, right? Second worrying thing is more and more people are borrowing money.
Yeah.
That includes loans. That, like you rightly said, is seeing a 76% year-on-year growth, outpacing asset growth. Asset growth is like what you're buying, like anything which is considered an asset, like in financial instrument assets or land, those assets.
Okay.
So retail loans, mortgages have significantly gone up. Private final consumption expenditure grew by 6%. Right. So this is a big problem. So why is this a problem? Because savings is a cushion. In case you lose your job, you have your savings.
Okay.
Some problem happens, you have your savings. Something to fall back on. Suddenly EMIs go up. You have your savings to down on. So lower savings means households have less financial security for emergencies, healthcare and long-term goals for retirement. In India, we do not have a social security like in the US. We have to be our own social security. If most people don't even have health insurance. So if you don't have savings, if some emergency happens, getting treatment will also become a problem. Correct.
Yes, sir.
Then what happens? More people borrow money and more money, they become more economically vulnerable. Vulnerable means suddenly you lose your job, you're not able to pay the EMI. So high debt levels and low savings makes households more susceptible to economic shock. Job losses or sudden expenses can choke.
Yeah, sir.
Sudden expenses, health emergency. They can choke. So even if something happens to your car, or your bike, you won't have money to pay. Yes, you have insurance, but insurance only covers so much. And sometimes insurance payment is not, depending on type of insurance you take,
Yes,
will not cover. Most people like to just take the cheapest insurance.
Yes, sir.
Because
True.
we find insurance to be a burden. Why should I take insurance?
Yes, sir.
So that's the other reason. Then economic inflation impact. The rising cost of everything is eroding purchasing power, making services goods more expensive, straining on more middle class households. School fees are going up.
Yes, sir. True.
And your basic commodities like milk, everything is going up.
Yes.
Eggs are going up. All this is putting Indian financial system at risk because rapid growth of borrowing, right, with inflation going up, plus recession coming to the US, they're saying. All this affects our banking and financial sector because our banks are the ones who are giving most of the loans. So suddenly, let's say everyone stops paying their loans. The amount of default starts going up. The bank will start having a lot more sick loans. That means bank works on taking money, people who give money in deposit, takes the deposit money and gives it out on loan and interest.
Yes.
So people are not repaying the loan. The bank will not be able to return people who deposited money. So this is what's going to happen. So consumption versus investment is the main criteria if you look at. In that, borrowing is going up. Less is being invested in productive assets. So long-term slow economic growth is happening. Meaning over a long period of time, economic growth will become slow because people are borrowing money not to invest in a business or make something productive out of it. They're borrowing money to consume.
Just to spend. Okay.
Just to spend. Right. So this is a huge problem that's happening. So central banks like RBI are facing tough balancing act between controlling inflation. Right. They want to control inflation. To control inflation, they raise interest rate. At the same time, they have to encourage growth. If you make borrowing very expensive, no one will borrow. Right. And it'll put strain on people who have already borrowed to pay. So defaults will go up. So you don't want to put up rates too fast. At the same time, inflation is also a problem. So this problem RBI is sitting on. Right.
Okay. Sir, you told about something called US is going to face recession soon.
It's already see, that's where the problem is. A lot of people are saying it's going to come. A lot of people are saying it's already come. So a lot of people are saying it's going to be very soft, not a very hard recession. Lots of people are saying it's going to be a very hard recession. The thing about recession is we only understand it really the impact of recession after it's over.
Yeah.
Looking
True,
back,
sir.
you can say last recession was like this. But when you're going through the recession, if you
We
always
can't
see,
say how it is.
yeah, even if you take historical news articles, newspaper articles, which were written during the recession, they will not be talking about a recession. They'll be talking about hardship and things, but they won't realize they're going through a tough time. So that is going on in the US. What was your question?
Sir, my doubt is in India, most of the investment are made by FIIs. If the recession hits the US market, will all the FIIs will withdraw their money and go to their
Recession is not the only problem.
Okay.
There's a lot of global global climate is not so nice now. Not about weather.
Okay.
Countries are not getting along with countries. Like what's happening with Canada and India right now.
Yeah,
I don't know if you've been following that.
Yes, sir. I saw some news called there is going to be a war around.
No, not war. Right now it's becoming unpleasant. They're doing tit for tat.
Okay.
Canada and India have a disagreement over an incident. So Canada immediately sent an Indian diplomat back home. India immediately sent Canadian diplomat back home. So Canada saying foreign investment into India, we'll think about it because Canada is one of the biggest streams of money into India because a lot of Indians sitting there. While India now today is saying we will think about Canadian wanting visa to come to India, we'll pause for a little while and see. So these things can escalate very fast. So FIIs will have to deal with all this.
Okay.
So if anything looks very nervous, makes them nervous, FIIs will start taking money out. Forget recession. So any number of reasons can be FIIs pulling money out.
Okay.
If they feel their money is going to be stuck, like China, they will not take right now because China money can get stuck. Same way, if India runs into some tough times with Canada and Canada is able to convince US, right now US is saying nothing to Canada, telling Canada be quiet.
Okay.
But that may change, right? Australia might change, sing a different song. If those things happen, FIIs will feel nervous.
They
might pull, even so. Any number of reasons can be there now for FIIs to pull out money. So this is a big problem. What you said is true. When FIIs start pulling out money, our stock market become even weaker.
Okay, sir.
Which will lead further saving erosion, lead further inflation. So these are things to worry about.
Okay, sir. Understood, sir.
Understood?
Yeah, sir.
Anyway, this is what we wanted to talk about today. How savings, though the news may look irrelevant to a layman, how it is important that Indian households don't stop saving. Thank you for watching the channel today. I hope you enjoyed this video today and hope you found it informative and entertaining as always. Thank you for watching. Paisa, Bolta.
Thank you.
I told you that I will be in Riyadh on the 22nd of September. The event place was not fixed. The team has now decided the event. It's in the holiday in Riyadh. Those who are in and around Riyadh and desirous of meeting me may contact the WhatsApp address below or the email. My team would get in touch with you.